Welcome back. Let's take up our viewer queries and Ms. CM Jyoti's question we'll take this stream. This is via email. And she has Tata ELSS, Quant Small Cap and Quant Mid Cap. She's given the current value invested in the fund so far, but otherwise, beyond that, I have no information as to for how long she wants to be in this fund.
Sure. My question is she's invested in the quant small cap and the quant mid cap and the Tata ELSS. So this kind of a portfolio offers a mix of growth potential and obviously the tax benefits. The quant small cap and mid cap has a history of higher returns, but also comes with a higher risk profile. While the Tata ELSS provides tax savings with an equity focused approach. So basically, you must look at your own risk tolerance and your investment goals when you have invested in this kind of a portfolio. So for example, the quant small cap has shown very good returns. It's given a 5-year annualized returns of 48% nearly. However, in the last 1 year, it's minus 3.16. So also it has got a focus only on small cap stocks because it's a small cap portfolio. So it carries a higher level of risk compared to other fund categories. The quant mid cap has shown also got consistent returns. Its 5-year annualized return is about 36.42. And in the last 1 year, it's minus 4.25. So it's important to note that the quant mutual fund is known for its aggressive portfolio management and high turnover ratio. This can lead to higher returns, but also increased risk. So, one needs to consider that because you have two funds where you've invested in the quant fund. Tata Mutual Fund has a history of, very strong fund management, which is your ELSS fund. So you would be advised to add a little more diversification into the portfolio by adding, more categories. Like you should be having a large cap, a value, or a balanced fund in order to reduce the risk. So your current portfolio is definitely a little more volatile. And, you also have a lot of, small cap and mid cap. Bond itself as an asset management company is known for running the portfolio in a little more riskier way. So you just need to know whether your risk profile is matching that of quant. Okay, Tata seems to be fine. So in case you invest for about 5 years and you're able to get a compounded annualized growth rate of about 12%, you will have about 7.67 lakhs in your corpus. So that's what you can be expecting. Currently, your valuation is, about 4.35 lakhs. So if you invest for the next 5 years, this is the amount that you would be getting. But do understand that it's going to be a slightly volatile journey. So there will be a lot of ups and downs because of the way that you have constructed the portfolio. So do remember to diversify a little bit more and to go into more into the large cap and balanced categories. All the very best to you.
Let's move on and let's take Krishna Rao's question. This is via email, and he says that he is 61 years old and has an amount of 85 lakhs which he wants to invest for 5 to 6 years, and he would prefer 3 hybrid aggressive fund wherein he would invest 15 lakhs and a Nifty 50 where he can invest 15 lakhs, and whether the lump sum should be staggered in what way is what he wants to know. 25 lakh he would like to invest in a gilt fund, and that is for 2 years. That is what he's looking for. And so he's told you his preferences. How would you like to take it ahead?
Sure. So since he's mentioned, he's been very specific in what he needs. So, all the very best to you and congratulations on being very well informed and, being quite aware of what you need. That's also a very good plus point. So I would like to recommend, HDFC Balance Advantage Fund to the tune of 15 lakhs, Bandhan Asset Allocation Aggressive Fund for about 15 lakhs, and the ICICI Pru Multi-Asset Fund for 15 lakhs. As an index fund, I'd like to suggest you ICICI Pru Nifty 50 Index Fund, also for 15 lakhs. Now, you've been also very, particular that you want to invest in gilt. So I'd like to recommend to you Franklin India Government Securities Fund to the tune of 25 lakhs, which you have mentioned. But you need to keep, a few things in mind when you're investing in gilt. So one thing is that the gilt funds typically will hold government securities and medium to long-term maturities, meaning the investment period can range from several years to over a decade. Okay, so since the securities are issued by the government of India, the gilt funds are considered to carry minimal risk or no credit risk, obviously, meaning there's a very low chance of the issuer defaulting on the investment, but there will be interest rate sensitivity. So gilt funds are very sensitive to changes in interest rates. When interest rate falls, the bond prices tend to rise, and vice versa. So it has an inverse relationship between price and coupon rates. So therefore, this makes a gilt fund typically very volatile because of the interest rate sensitivity. So over short periods, say about 1 to 3 years, gilt funds can significantly have a change in the NAV and losses due to the interest rate fluctuations. But however, over the longer term, say 10 years or more, the returns tend to average out. So you would be able to get the coupon rate that that you have invested in. So keep in mind that the credit risk is not there, but the interest rate sensitivity will be quite high in a gilt fund. So if your tenure is longer, then of course it's a very good suggestion. But it can be a bumpy ride because a lot of times we feel that we've invested in government securities or gilt, and there will be no volatility. But that is exactly the opposite. Okay. So you've also asked whether you should be investing lump sum or in a staggered manner. So in the mutual funds which are equity based, like the HDFC Balance Advantage, the Bandhan Asset Allocation, and the ICICI Pru Nifty and the Multi Asset, all of those you can invest over 4 to 6 weeks by using a systematic transfer plan. And the debt fund, which is Franklin India Government Securities, you can enter that as a lump sum. So in case you get about 8% compounded annualized growth rate over the entire portfolio of 85 lakhs, then after 5 years, you can expect to have about 1.25 crores in your corpus. So this is compounding at 8% because you will have at least 1/4 of your portfolio in gilt, which is government securities, and the balance in, various equity funds, which are also the balanced and the dynamic asset allocation category. In case you can get about 10% compounded annualized growth rate, you will have in your corpus about 1.37 crores. So I'm giving you both the options at 8%, 1.25 crores, and at 10%, 1.37 crores. It could be higher or lower depending on how the interest rates and the market moves in the next 5 years. So please ensure that you are keeping this a very close look at your portfolio and reviewing it regularly because you're already 61 and you're looking at this kind of portfolio for your retirement. So all the very best to you, and I hope you have a great investing journey, Mr. Rao.
All right, with that, it's time up on the question and answer session on the show also today. Thank you so much, Nistine, for taking time out and helping our viewers with their portfolio queries. And for all our viewers, I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.